this idea of hitting the zero velocity. In other words, we always have baselines, and it allows us to think about the market in terms of structure that perhaps a lot of us are forgetting about because, well, we simply haven't been doing it enough. The whole point about this is that the only way you can create a V0 is if a V1 exists. And V1 equals terminal velocity. So when you see this type of idea here forming, it's an incredibly easy thing to consider. We did this in an earlier conversation. I wanted to make sure that you had you were clear in understanding about what we understand about this process. When we see a price dropping like this, we don't know what the terminal velocity is at this point because we don't know, we haven't seen it yet. The terminal velocity might be a lot faster, it might be a lot slower. You know, we haven't seen it yet. We don't know what the terminal velocity is. So therefore, at this stage here, we don't have that VT, if you like, or TV, if you like that idea. But when we see a pivot coming in, if the price does that, we don't have a V1 because that's now a buy-side successful auction. The bottom edge becomes a V0, of course, and this is at the essence of every interns exercise we've ever done. But if the price comes into this area here, then of course, what happens here? Well, at this stage here, acceleration goes to 0, correct? At that point there, acceleration is 0. We've got velocity here, but we don't know yet where this velocity is going to take us to. But obviously the idea is that at this point, if the price now reaches a point, because this is still accelerating, we don't know if this is going to accelerate that fast or accelerate that fast. We don't know what the acceleration is going to be at this point. So what happens is we need 2 points to measure this, and that provides us with a terminal velocity. This line here, this is now the V1 line, which is now the terminal velocity. If we've now got terminal velocity here, we now know that that becomes a V0. So this just helps us with this concept of spring structure. So when we understand that that's what helps us with terminal velocity and spring structure, we know if we fail to reach that, then this is the basic exercise for the interns. In other words, if we've got terminal velocity here, and then the price starts to accelerate back towards the bottom edge, then we can obviously understand that we now have an intern's tipping price sell, an intern's BSG squeeze sell, and with the objective of reaching terminal velocity, which is now at this price here, of course. Terminal velocity is now known to us. So we would expect to hit that terminal velocity price and then bounce off that price level, which means we might have got an tipping price sell here and a BSG squeeze sell here, and obviously an intern sell perhaps even here, with the terminal velocity hitting at this price. So again, if the price bounces as you would have expected, and then we start seeing something else happening, with this price here is now obviously a V0. So we now understand that that becomes what is called the spring trade level. So it's just different terminology to remind yourself that these are things that you're all very familiar with already. It's not new phraseology. It's not new stuff. So what happens when this breaks here and this turns back up? Well, obviously we've got a problem, because obviously this is now creating a brand new V1 here. At this point here, it's now creating a V1. And obviously on the basis that we're getting a new V1 coming into this area here, then of course we've now got to recognize that that's the case. The failure to connect with this price now presents us with a V0 here. And if that's now a V1, then of course this becomes a V0 as well. You can see that the change of structure becomes something simply that we mark on our charts and pay attention to. It doesn't give us a trade, it just gives us knowledge about where liquidity pools are and knowledge about where these velocities, there's terminal velocities, exit the trade. When we do this in practice, it all begins with a failed auction. A failed auction at the high price here puts in a possibility that we're getting a V1 level, so we can start drawing in a V1 level there. and we can run that V1 level down, and we can see that it pretty much stays on the V1 level for the entire move until it starts accelerating away. Well, on the basis that we can simply highlight that, we now know that this is V0. This is the clearest and closest V0 we've got. So if we're going to sell this, this is the price we're going to be looking at to sell into this. When we start putting in a pivot price, we start understanding that with the pivot price in, this doesn't really create a V1 because it's a lot less than it was. We're just coming into data, by the way, so we'll just pause for a second, get this data out of the way, and then we'll crack on. Another hot number, guys. That's disappointing, isn't it? Second hot number of the session already. Hot unemployment claims 202,000, down from 217 after the non-farm employment change of 164, up from 120,000. So that's two hot prints in a row. That's not good news, I'm afraid. Not good news for bonds there, and we've seen the bond price continuing to chase the bottom edges again there. So that's a little bit disappointing from an inflation point of view and from a hopes for an interest rate drop sometime soon point of view. So that's put a little bit of a spanner in the works for that one. The market maker had transitioned from a long position to a short position for those numbers. Interestingly enough, you'll see the market maker in here had been quite comfortable about buying into this this long position here once the book went bid. But you can see just ahead of this number, you can see the market maker actually flipped into a short on this rally here. And you can see that the market maker took great joy in seeing that print coming out, and a nice easy pop to the downside, I think, was pretty much in line with what the market maker considered in terms of how this was starting to stack up.